Moscow is warning that inflation could hit 23% this year, and the economy is expected to sink into recession as well. For ordinary Russians, the international assault on their country's finances has become plain to see.
The clearest sign of American and European sanctions against Russia can be found in the shopping centres, where the storefronts of many Western companies are closed. The popular US fast food chain McDonald's is completely pulling out of Russia after nearly 30 years in the country. Others such as Pepsi, Starbucks and IKEA have also shut down their operations, with no plans to return in the foreseeable future. Meanwhile, prices, especially for food, have risen enormously, but the ruble exchange rate has staged a surprising recovery. At the start of the war, the value of the ruble plummeted dramatically, but intervention by Russia's central bank allowed the exchange rate to stabilize again, making the ruble now stronger than at any point in the past 5 years. The central bank was initially unable to cushion the fall in the exchange rate. Its foreign currency reserves stored abroad were blocked, but the state quickly forced Russian companies to exchange 80% of their foreign exchange earnings into rubles, helping to stabilize the exchange rate. Besides, the export of oil and gas continues to bring hundreds of millions in foreign currency daily to Moscow.
Now, those sanctions are taking effect. The damage has fallen short of the total economic collapse that some had predicted for Russia. I asked Vasily Astrov from the Vienna Institute for International Economic Studies why that was.
The collapse takes time. The thing is that the full impact of Western sanctions has not been felt yet. Normally, you would expect the immediate impact from financial sanctions, but these are precisely the sanctions for which Russia was reasonably well prepared. Russia is much less well prepared for trade sanctions, which are more of a long-term nature, and the full impact of those trade sanctions is yet to come. I expect in the course of this year, third quarter, fourth quarter of this year, this is the time where the full impact of trade sanctions will be fully felt.
The current economic situation in Russia is like a ticking time bomb, with the potential to wreak havoc on the country's stability and prosperity. At the heart of the problem is Putin's wrong decision to fight against Ukraine, which has created a crisis that seems almost impossible to solve. On the other hand, the economic sanctions from the West have added further pressure to an already strained situation. The first few months of Russia's invasion of Ukraine were like a game of cat and mouse, with the world watching anxiously to see what would happen next. The situation caused a ripple effect that drove up oil and natural gas prices, creating a windfall for Moscow. It was like a scene from a Hollywood blockbuster, where the hero suddenly finds themselves in possession of a fortune, seemingly out of nowhere. But as with all good stories, the happy ending was short-lived. Today, those days are over, and Russia finds itself in a very different position. To make matters worse, the Western sanctions that have been imposed on Russia are beginning to bite harder, leaving the government revenue squeezed and the economy in a precarious position. The news coming out of Russia in recent months has been anything but positive. According to various sources, the country's GDP contracted by a staggering 2.7% in the fourth quarter of 2022. This marks the third consecutive quarter of decline, a trend that has left many wondering what the future holds for Russia's economy. Russia's economy is facing a perfect storm of challenges. The country's biggest exports, gas and oil, have lost major customers, leaving a gaping hole in the economy. To make matters worse, government finances are strained, and the ruble has taken a major hit, losing over 20% against the dollar since November. The labor force has also been hit hard, with young people being sent to the front or fleeing the country over fears of being drafted. This has led to a shrinking workforce, putting additional strain on an already fragile economy. But what led to this economic disaster? The saying goes, you reap what you sow. And this seems to be the case with Russia's current predicament. As the country faces the consequences of its actions, it's clear that Putin brought this upon Russia. But the real victims are the people of Russia, who are now suffering the consequences of their leaders' actions. In response to Russia's invasion of Ukraine, the West decided to impose sanctions on Russia. These sanctions that have been imposed on Russia are aimed at one thing: to pressure the country to withdraw its troops from Ukraine and respect its sovereignty and territorial integrity. Let's check out some of the sanctions imposed by the West on Russia. Some of the sanctions imposed on Russia are nothing short of extreme. with far-reaching consequences that are being felt across the globe. Banning transactions with Russia's central bank and freezing its assets held in Western jurisdictions is a bold move that sends a clear message that the West will not tolerate Russian aggression. But the sanctions don't stop there. American companies are banned from making new investments in Russia. While the EU has outlawed new investments in Russia's energy sector, these moves are aimed at hitting Russia where it hurts the most, targeting its economy and its ability to do business with the West. The ban on secondary market trading of Russian government debt issued since March 1 by the US, along with restrictions on trading in Russian government bonds by the EU, further highlights the severity of the situation. And it's not just financial institutions that are feeling the heat. The EU has even kicked 7 Russian banks off the SWIFT financial communications messaging system, a move that will make it incredibly difficult for them to conduct international transactions. The sanctions imposed by the West also have a direct impact on Russia's energy sector, with the EU banning imports of Russian oil brought in by sea from December and banning all imports of refined oil products from Russia in February 2023. These moves are aimed at targeting Russia's economic lifeline. The impact of the sanctions imposed on Russia by the West cannot be overstated. They have dealt a severe blow to Russia's economy, resulting in a sharp decline in its currency, the ruble. The ripple effects have been felt across the board, from increased inflation to reduced foreign investment and higher borrowing costs. As the ruble tumbled, capital flight soared, as investors withdrew their money from the country in droves, fearful of the uncertainty and instability. Putin's quest for greater imperial glory has proven to be a double-edged sword. While it may have brought some initial gains, the pursuit has come with a relentless stream of bad economic news. The collapse of oil prices has hit Russia hard, leading to a decline in state revenues and less money for Putin's ambitious military and social spending projects. And how did Russia respond to these sanctions? The ongoing conflict between Russia and the West has reached new heights as Putin has responded to sanctions with a show of military might. Despite economic pressure from the West, Putin remains defiant and is escalating the military conflict. He has ordered Russia's deterrence forces to a special regime of duty and put the Russian army on high combat alert, claiming that the sanctions imposed on Russia are illegal. This has raised tensions between Russia and NATO countries, which have responded with aggressive statements of their own. The situation remains tense and unpredictable as both sides continue to dig in their heels. Putin also issued a stark warning to Western powers considering a no-fly zone over Ukraine. He has cautioned that such an action could have catastrophic consequences for not only Europe, but the world at large. Russia also hit back at Western sanctions with an export ban. Putin's retaliation against Western sanctions has been multifaceted, including measures such as banning food imports, expelling diplomats, and seizing assets. He has also ordered exporting companies to sell the majority of their foreign currency revenues to support the struggling ruble, and required companies from unfriendly countries to pay for their energy in rubles. To further tighten global supply and raise prices, he even halted fertilizer exports. In addition, he has taken steps to prevent capital outflows by curbing foreign investors' assets sales and using funds from a rainy day fund to limit borrowing and support domestic companies. But did all these things help? Not really. With Putin's PhD in economics, some had hoped that he would be able to steer Russia towards stability and prosperity. However, it seems that he may be leading the country down a dangerous path reminiscent of the chaos of the 1990s or even the dark days of 1918. And to make matters worse, the oil cap sanction. Did you know that the price of oil isn't just determined by supply and demand? In fact, the West has imposed sanctions on Russia that include a cap on the price of their seaborne oil exports. The cap means that buyers of Russian oil have to pay nothing more than $60 per barrel if they want to use operators or insurers based in the EU or other countries that signed on to the cap. It's quite a bit lower than the international benchmark, Brent crude, which was trading at around $80 per barrel at the time. It's been a rough start to the year for Russia's oil industry, with export revenues taking a major hit due to sanctions imposed by the West. In fact, a study by the Kyiv School of Economics found that the oil cap and ban caused a staggering one-third drop in oil export revenues between January and March 2023 compared to the previous quarter. That's a massive blow to the country's economy, as oil is a major source of income and foreign currency. The sanctions also reduced Russia's daily crude exports by about 1.3 million barrels or 15%. It's clear that these sanctions are having a significant impact on the oil industry and on Russia as a whole. With all of this tragic news about the economy of Russia, how will it affect the war with Ukraine? The war in Ukraine has taken a toll on Russia's economy, with a range of effects that have both positive and negative implications for the conflict. On the one hand, the economic collapse has reduced Russia's military capabilities by weakening its ability to finance and sustain its operations in Ukraine, as well as modernize and upgrade its weapons and equipment. This means that Russia may not be as well equipped to continue its aggressive tactics in the region and may be forced to reassess its strategy going forward. On the other hand, the economic collapse has also increased the cost and risk of further escalation or expansion of the war, which could potentially deter Russia from taking more aggressive action. And what about Russians who do not support the war? While the war in Ukraine may have had some supporters in Russia, it's had devastating effects on those who don't support it. Millions of Russians are facing lower incomes, higher prices, and reduced opportunities as a result of the conflict. The economic prospects for these individuals are bleak, and they may find themselves struggling to make ends meet as the war drags on. The war has led to increased repression and make it even harder for Russians to speak out against the conflict. On a broader level, diverging resources away from productive sectors and innovation toward military spending and security. The war in Ukraine has had a profound impact on Russia's global standing, cutting off its access to finance, technology, and cooperation with other countries and organizations. This has left Russia increasingly isolated and could have serious long-term consequences for its economic growth and development. But the impact of the war goes beyond just economic concerns. It has also increased political risk and uncertainty in Russia, with the regime of Putin becoming more authoritarian and the opposition and civil society being weakened. This has led to concerns about the future of democracy in Russia and raised questions about the country's role in the global community. It's a complex and challenging situation with far-reaching implications that will be felt for years to come. Where is Russia headed, and what does this mean for Putin's future? The ongoing conflict in Ukraine has been fueled by a massive influx of resources from Russia, including war materials like drones, missiles, and mercenaries. However, as the conflict drags on, it's becoming increasingly clear that even Russia's vast economic resources may have limits. Putin's ability to sustain the war effort will depend on how much he is willing to deplete Russia's economic resources and how long he can keep the country's citizens on board with the ongoing conflict. In some ways, the very act of waging war could ultimately weaken Putin's grip on power, as it depletes the country's resources and exacerbates political divisions. One of the most ironic aspects of Putin's invasion is that it may end up shortening his own lifespan in power. By embarking on this costly and divisive war, Putin has put his own political future at risk, potentially alienating key constituencies within Russia and weakening his own grip on power. The very act of seeking to cement his legacy may ultimately end up undermining it as the cost of war continue to mount and the political fallout becomes increasingly difficult to manage. Let's know what you think in the comment section, and don't forget to like, share, and subscribe to stay up to date on the latest news about what's happening in the world today. Thanks for watching.